Now, additionally, I'm going to dive into how to read between the lines of a profit and loss statement to pick out something called seller's discretionary earnings. Essentially, I'm going to show you how a lot of times when small businesses are ran, the owners have their own kind of personal commercial expenses in the deal. And if you learn to recognize those, you can factor them back in because they may not necessarily transfer with the sale of the property. Things like interest expense or vehicles and owner's salary. As an investor, when you buy this property, you might not need to draw an owner's salary to the tune of $145,000 a year. And that could simply be return on your investment. And you probably are not going to want the vehicles that might not necessarily be needed to run the commercial business you're buying, therefore saving yourself another $20,000 to add to your bottom line. So I'm going to show you how to use seller's discretionary earnings to really read between the lines and size up a deal so you know, hey, if I'm paying this amount of money to get in this deal and the net operating income according to the profit and loss statement says this, but I'm also seeing some expenses here that could be personal. How do I factor that back in, and how much money will I actually have at the end of each year?